Hi everyone, Derek Hansen here from Cox Automotive's vAuto. We're here for vAuto's live market view for the second quarter of 2023. Certainly, the overwhelming trend in this quarter was the return of new vehicles to dealers' inventories across the country. To speak more about that trend, I've invited Brian Finkelmeyer from the OEM team here at Cox Automotive to share more of his perspective of what's happening on the ground. So Brian, why was this the trend of the second quarter?
Yeah, Derek, thanks so much for having me.
You bet.
Yeah, you're right. This has been really big news in the car business. It wasn't that long ago. We remember during the pandemic driving across dealership lots where there's practically any inventory. And the great news is that on a year-over-year basis, new car inventories are up about 70% versus a year ago. So I think many dealers out there are beginning to see their more availability on their lots for their customers. But I think it's also important to note that we're still operating at about 50% of what we were before the pandemic. So even though things have gotten better, we're only maybe halfway back to where we used to be.
Yeah, we still have a long way to go. And speaking of that, what we've seen in talking to dealers is that not all OEMs are created equal here. Some OEMs have much more inventory out in with their dealers than others, which leads some to believe that maybe that's a strategy, right? Is there a strategy at play here among some OEMs to really focus on gross profit over market share? And if so, do you think that's really sustainable over the long term?
Yeah, that's a great question, Derek. I think absolutely you're right that if you look, prior to the pandemic, the industry was selling roughly 17 million new cars a year. And today we're operating closer to 14 million. So there are quite a bit fewer vehicles being sold. But if you look at the gross profit generation of these major car companies, they're basically making similar money to what they're making under the 17 million environment. So I think you're right. There's definitely, certain brands that are out there absolutely looking to maximize their gross profit. But I think there's a growing awareness in the car business right now that the days of selling this really expensive rich are probably coming behind us. In fact, one of the executives at General Motors recently commented that we're past peak pricing, which I think is an acknowledgement that we're going to start to see some pullback in terms of these really high MSRPs that we've seen.
Well, and speaking of pricing, and that's a great point, certainly pricing is at an all-time high. We just saw the average price of a new car sold reached a record again in April. And with the Fed raising rates and interest rates continuing to climb for consumers, that is creating an affordability crunch here. How do you see that impacting the new car strategy going forward?
Yeah, that's a great question too, Derek. I mean, absolutely. When you consider that the average new car payment right now is running around $780 a month, average used car payment is $560. In fact, today's used car customer is paying more on a monthly payment basis than what new car customers were paying just 3-4 years ago. So you're right, there absolutely is an affordability crunch, and I think that's going to really cause pressure on dealers to be more cognizant of those model lines that are more economical, because that's where we're seeing really tight day supply. We're seeing sort of growing inventory, growing aging inventory of the more expensive model lines, and we're seeing a real fast turn on the more model lines that are kind of $25,000 and below. And I think that dealers would be wise to be very focused on turning and earning those models as quick as possible.
Well, Brian, really appreciate that perspective. I think that's a great segue to the used car implications, right? And certainly there are very strong implications to the used car market. And as we talk to dealers on how to manage through this turbulent environment as new cars come back into the picture, the focus again is on discipline and maintaining your strategy of what you buy and sell to retail in your market, right? Maintaining what fits your business profile and your strategy. And this came up very recently in a conversation I was having with a dealer as we were looking at his inventory and what his focus was in filling holes in his inventory. They were really focused on that 15 to 20K segment, that affordability segment in used cars. And as we dug into the data, the real opportunity for them and where they had a gap was 20 to 25 actually was a faster turning segment.
Yeah.
So able to work with him to get more SUVs in that 20 to 25K segment, drive more growth for this dealer. But beyond that, another key area of sensitivity in used car is that late model 1 to 3 year old used, right? You spoke to incentives returning.
Yeah.
Particularly in the Atlanta market, I've seen it a lot with all the big truck makers, right? And so if you're holding a used car in that 1 to 3 year old segment, certainly we want to keep a close pulse on what's happening with new car incentives, as that's a key trade-off for our consumers, right? As we think about pricing and sensitivity in that segment. Bottom line, in a market that's as turbulent as what we're seeing as new car inventories come back, certainly we need to stay close to the data, be driven by the insights, and have a tool that can help you manage your inventory and stay close to what's happening on a day-by-day basis. Brian, any other advice for our dealers as they navigate through this new car inventory return?
Yeah, you know, Derek, I think as we begin to see, certain pockets of model lines and segments where we begin to see growing inventories and sort of a slowing, as you mentioned earlier, affordability pressure, that dealers are going to have to actually get back in the pricing game a little bit. And we're beginning to see that already. This year, we're seeing that new cars are actually retailing about $171 below MSRP, which is sort of a signal that dealers are beginning to recognize that the day of selling cars over sticker is maybe a little bit in the rearview mirror.
That's right.
And that we're going to have to be very thoughtful about how we're pricing our inventory. And I think one other point that I'd make with the rise in interest rates is going to put more stress on dealers from a floor plan perspective as well. So last thing we want to be doing is sitting on expensive inventory that's aging that we're paying a holding cost for. So I think there's sort of a new dynamics in the marketplace we got to pay close attention to.
Yeah, I couldn't agree more, Brian. I think discipline and staying close to the data as we manage through these changes and this volatility, certainly something we'll keep an eye on here at vAuto and Cox Automotive. We're here to support you as you have questions and are looking for help managing your inventory. In the meantime, we'll continue to watch the trends and we'll be back next quarter. Thank you.